Thank you for joining me for an in-depth look at the chart of the day. I'm going to take a look at the January barometer. And the old saying on Wall Street is, as January goes, so goes the year. And data backs this up. An up January is followed by an up 11 months, February to December, 87% of the time since 1950. A down January precedes weakness over the next 11 months. And we see an average gain of just 1.2% in the 11 months if January is down. Well, this year, January should be up. And that hints at strong sentiment. Now, investment managers behave in some predictable ways at times. Cash tends to build up in December for a variety of reasons. One is simply bonus protection. If you're having a good year, there's no point piling into new trades that risk your bonus. If you're having a bad year, just wait for a fresh start after the first of the year. So cash often builds up, and that leads to a rally in January. If we see a strong rally, that indicates investment managers are aggressive and bullish and trying already to earn another big bonus at the end of this year. Now, if we see above average gains, this chart shows the average January, what happens after a positive January in the 11 months, and then what happens after a negative January. And you can see the numbers there. What stands out is if January gains more than 5%, we see great returns, and we see them more than 90% of the time. It's only occurred 12 previous times, so this is the 13th. Here's an in-depth look at the other times. 1987 is the outlier. Perhaps stocks got ahead of themselves that year. In January alone, they were up 13.2%. So that's the only year, though, where stocks did not continue to rally for the rest of the year. And as you see, again, in all but 1 year, we had a double-digit gain. And what's interesting is the drawdowns, the intra-year pullback tends to average about 8%. If we take out 1987 as the outlier, the average is about 8.2%, the median 7.9%, so half are above, half are below 7.9. These are all bullish factors. The January barometer now adding to the weight of the evidence for a bull market. Momentum and breadth are bullish, earnings are growing, the economy continues to expand. If we get a pullback, we should welcome it as a buying opportunity. Thank you for joining me for an in-depth look at the chart of the day.